Welcome to BigONE Weekly News Update. I'm Gavin. The first week of September 2025 brought a mixed performance in crypto markets, softer economic data from the US, and rising confidence in rate cuts that buoyed risk assets despite weaker fundamentals. Crypto market overview. Bitcoin BTC rose 2.6% to close at $111,130, while Ethereum ETH slipped 2% to $4,300. Solana SOL gained 2.9%, ending the week at $206. The overall crypto market capitalization increased 1.1% to $3.83 trillion, but trading activity remained muted. Weekly trading volume fell 20% to $143 billion, well below the average. BTC's trading volume stood at $56.6 billion, down 17% from average, while ETH volume was $34.3 billion, 25% below average. Ethereum's network fees dropped to just 0.14 GWE, signaling low on-chain activity. Macro and AMP equities. U.S. equities began the week strongly, hitting record highs after soft non-farm payroll data boosted expectations of monetary easing. However, concerns over a potential recession and doubts about the Fed's timing led to pullbacks. By week's end, the S and AMP Wink with tongue sticking out 500 rose 0.33%. The Nasdaq gained 1.14%. The Dow added 0.32%, and the Russell 2000 climbed 1.04%. Gold surged 3.56% to a historic $3,641, extending its momentum as investors sought safety. Rising rates, shifting allocations. Ultra-long-term yields in developed economies spiked, steepening the 10- and 30-year yield curves. With G7 fiscal deficits still large and fiscal tightening measures losing steam, pension funds are showing less appetite for long-dated government bonds. This shift could redirect institutional flows toward alternative assets such as gold and Bitcoin. Fed expectations. Weak data fuels dovish outlook. Markets are now widely pricing in 3 rate cuts by the Federal Reserve this year, with the odds of a 50 basis point cut in September climbing steadily. Fed Chair Jerome Powell reinforced this dovish tilt at Jackson Hole, prioritizing employment support while downplaying inflation risks. Ironically, weaker job growth is being interpreted as positive for markets as it bolsters expectations for deeper cuts and sustained risk asset performance. ETF flows. Bitcoin regains momentum. Capital rotation between Bitcoin and Ethereum ETFs was evident last week. Bitcoin ETFs attracted over $300 million in inflows, while Ethereum ETFs saw net outflows, marking the first such reversal in a month. This shift helped offset Bitcoin's large outflows in August and lifted sentiment. Notably, BTC-linked investment products had often underperformed compared to ETH ETFs during prior inflow periods. Regulatory jitters also weighed on sentiment, as reports suggested Nasdaq may tighten oversight of companies issuing shares in exchange for tokens. Ethereum treasury companies like DT faced heavy selling pressure, while Bitcoin treasury firms such as Strategy, formerly MicroStrategy, ticker MSTR, were less affected, relying mainly on debt issuance to boost holdings. If the current pattern of inflows continues, it may signal a gradual capital rotation from ETH back to BTC. The week ahead. Investors will closely watch the release of the U.S. annual employment revision data on Tuesday and the CPI report on Thursday. Stronger than expected numbers could further strengthen bets on a 50 BP September rate cut.
Join BigONE today and take advantage of the growing cryptocurrency market.